Bitcoin is about to crash. Hi forex traders, my name is Francis and you're welcome to Carrie's Trading Institute. If you are a new viewer on this channel, I would like you to kindly click on the subscription button and don't forget hit the notification bell so you stay updated every time I post a video. In today's episode, I want to show you my perception about Bitcoin price action, and let's quickly go to the chart. So guys, don't be afraid because I said Bitcoin is about to crash, but technically from what I'm seeing on the chart, we are about to see another Bitcoin crash. I don't know when this is going to happen, but from what I'm seeing, Bitcoin is likely going to go down. The more it's likely going to be priced into a deep discount. Okay, and I'm going to show you why I said that. So but before we look at the Bitcoin chart, let's look at the dollar index. You will remember that BTC USD is paired, or BTC is paired with the USD, right? BTC USD. So I want us to look at the dollar index, which literally is the main driver of all these assets, because the dollar is king in the financial market. You should know that by now. If you are an investor in the financial market, you should know that whatever happens to the dollar is likely going to affect all other assets paired up with the dollar or associated with the dollar, and BTC is associated to the dollar. So guys, this is the dollar index chart, and we are currently seeing price at what we call a flip zone. We are seeing the dollar at a flip zone, and exactly at that flip zone I am seeing a bullish order block. This is a bullish order block, and you look at how price is beginning to retract from that bullish order block. This bullish order block is an institutional reference point. Okay, so price expanded up and then retraced into the bullish order block. This may likely engineer another bullish move on the dollar to further reprice into this deep premium or even above the buy side liquidity on the monthly time frame of the dollar. This is the monthly time frame I am analyzing, and reason is because the institutions are largely positioned on the higher time frames, and I've always said that the higher time frames are the main drivers of the liquidity. That is where the drawn liquidity resides, on the higher time frame. So this is a relative equal high, and once we see a relative equal high, you should know that there is a pool of liquidity residing above relative equal highs or relative equal lows, or an old high or old low. So in this case, what we have here is a buy side liquidity residing above that point, and then we have a sell side imbalance, buy side inefficiency, even though we see that the dollar actually traded off a mitigation block. This is a mitigation block, okay, of the monthly time frame that has a fair value gap attached to it. Remember in our last video on institutional reference point, where I pointed that order block is not all that there is to smart money concept, I showed you the differences between a mitigation and a breaker block, and I mentioned that the most valid mitigation of breaker is the one that has confluences of a fair value gap or another block attached to it. So this is a mitigation block because we have a failure swing and price break structure. There's a fair value gap there. This is a sell side imbalance and a buy side inefficiency. Price traded into it and price retraced into this demand zone, what demand and supply traders will call it. This is a demand zone, right? So price is at this demand zone and also a flip zone, okay? And we are seeing another block there, which is a powerful institutional reference point. So guys, let's see what is going to happen. We may likely see a retracement into the bearish order block of this monthly time frame. This is a bearish order block that has been formed after the smart money reversal. We may likely see a low risk sell from this order block of the monthly time frame, okay? Or price may likely want to retest that sell side imbalance and buy side inefficiency, or even want to trade into the ultimate buy side liquidity on the dollar. Okay, we don't know what's going to happen, but this is our anticipation with the chart and with the market. We don't know what's going to happen, but this is our current bias. And if you look at above this buy side liquidity, there is a pool of liquidity void residing above it, which could literally be the drawn liquidity. And the reason why the dollar may want to go up again and take out this liquidity. When you blend up these technicals with the fundamentals, you'll find a significant reason why the dollar may likely go up again. Okay, so this is my bias currently on the dollar. Just go to the weekly time frame and you would see that price also is at a deep discount of this immediate range. When you measure between the low here, this swing low to this swing high, you will see that price is currently in a deep discount. Okay, and then we are beginning to see price forming rejection candles after it traded into this mitigation block and then this discount, and especially because it took out sell side liquidity below this old low and this low as well. And then we see rejections, we are seeing rejection, and then this weekly opening, and then this week we see the weekly candle opens and trades below the opening price. This is the opening price. We see the opening and price trades below that opening price. This literally tells me that this is a manipulation to the downside. We may see a push to take out the low resistance liquidity run on these consecutive highs, this high, this high, and this high, and then price may likely trade into this sell side imbalance and a buy side inefficiency. What is that sell side imbalance? This is it. When you mark it up, you will see that this is the sell side imbalance and buy side inefficiency. Okay, so we may see a repricing into this, and look at the confluence. We have the other block of the monthly time frame confluencing with the sell side imbalance and buy side inefficiency. So price may go up into this on the dollar before it starts going down. So this is my bias on the dollar. I'm expecting a bullish bias on the dollar. Okay, so let's go to the hourly time frame. So this is the 1 hour time frame of the dollar index, and like I analyzed earlier on my previous analysis, the dollar versus GBP USD, I showed you why the dollar needs to trade up from this point. Okay, we outlined that this was the weekly opening price. Okay, this is the current weekly opening price, and then price traded below it. This is Asian session between 2 a.m. to 6 a.m. Between 2 a.m. to 6 a.m. GMT +1, price traded below the Asian box, and then price traded into an institutional reference point of the daily time frame, which is another block that had a fair value gap attached to it. So that was why we were anticipating that the dollar should go up. This is it, that fair value gap and bullish order block on the dollar daily time frame. Okay, so you can see that on the 1 hour, price traded into it and price is heading upwards. Okay, price swept liquidity also and is finding support at that order block and fair value gap of the daily time frame. So we need to see the dollar take out this we need to see the dollar take out these relative equal highs. And why is that? Because there is a pool of buy side liquidity residing above it, and we need to see the dollar trade into our weekly sell side imbalance and the buy side inefficiency. That is our ultimate objective. But on the other hand, we need to see it trade into that low resistance liquidity run, those 3 consecutive highs that were formed. This is the first. When you put a trend line, you see that this is a diagonal liquidity that should be traded into. Okay, so that is that with the dollar. Let's go and analyze. So let's look at BTC USD and see what's happening with BTC USD. So BTC USD here serves as a foreign currency because the dollar here is a quote currency, not a base currency. So go to the weekly time frame, the monthly time frame, and let's look at what's happening on Bitcoin. Now price tapped into that old low, which is also a bearish order block, and we are now seeing the sell rejection. Price is actually heading to the downside. So where is price going to go? Price is going to take out this immediate sell side liquidity. Why is that? Because there is a pool of liquidity residing below an old low and old high. So we are anticipating that price is going to take out this old low, and price is going to trade into the buy side imbalance and sell side inefficiency, and this is an institutional order flow entry drill. This is why I labeled it as IOFED. Okay, so price is heading for that monthly IOFED. So guys, institutional order flow on the monthly time frame is bearish. Where is the draw on liquidity? This outline fair value gap or buy side imbalance and the sell side inefficiency. This is where I'm looking at, and then this is also relative equal lows residing there. Okay, I know a lot of you don't want to see Bitcoin trade as low as this. I don't want to see Bitcoin trade as low as that either, but I'm telling you, this is also a potential. We don't know how far it's going to go, but this is high probability. Once Bitcoin gets to this level and we see the dollar showing symptoms of a bearish continuation trade, then we'll be more confident to go long on the Bitcoin. Okay, this is how to analyze any crypto asset before you go about investing your money. Take out time to study what's happening on a technical basis, and then you blend fundamentals with the technicals. So let's go to the weekly time frame. So this is the weekly time frame. Price actually traded into a mitigation block. What is that mitigation block? Remember, I said a mitigation block is when you have a failure swing. Okay, then you expect price to trade into mitigation. This is the mitigation, right? Look at this. Price from the low, price from the lower high, and then price broke structure. This is our mitigation block. So that was where institutions sped up their shorts. So when you mark the low to the high of that other block that was violated, that's the mitigation block. So price traded into that mitigation block, and then it has a fair value gap attached to it, although it's a wide range fair value gap. So price traded into that mitigation, and then price is heading to the downside. So where is the draw on liquidity on the weekly time frame? The monthly buy side imbalance and the sell side inefficiency of the monthly time frame. We are expecting that Bitcoin is going to take out this immediate sell side liquidity and in the long run trade into this institutional reference point as already outlined on the higher time frame. Then on the daily time frame, let's see if it's possible trade to take. So this is the daily time frame, and what we are seeing here is that price has already broken structure to the downside and has retested that fair value gap, and this is also a breaker block. You can call this a breaker block. Price has retested this breaker, okay, and is already showing signs that it wants to start going down. Let's go to the hourly time frame and see if we can find something, or the 4-hour time frame. Okay, on the 4-hour, price consolidated for a while, and price has taken out the high of that consolidation in a form of manipulation. That's why you see these sharp rejection candles to the downside. Okay, and now price is showing symptoms, or now price is showing willingness to go down. So what am I going to do? Look for a breaking market structure on the 1 hour and enter a sell. As you can see, price has already broken structure on the 1 hour, and price is already selling. Price has broken structure, price has retested the last or the other block. You can see that this is the other block. Okay, so you can look for re-entries when you see an expansion to the downside. Any retracement, you look for re-entries, and we are selling this into that higher time frame institutional reference point because it is our draw or liquidity. This is our first take profit on this swing trade, and ultimately we are trading into that higher time frame. So guys, these are my views on Bitcoin and the dollar. If you like what I'm doing, like this video, share this video, tag your friends or families or traders you know who love to watch what I'm doing and will learn from what I'm sharing, and then kindly subscribe to this video. Guys, you need to push this channel. We need to subscribe to this channel so that we can get as more viewers as we can. And until next time, I wish you good